Wow, what a week. Or a couple of weeks, I should say. So let's just run right through it. The biggest banking crisis since 2008 continues with the fall of Signature Bank, the forced acquisition of Credit Suisse, and the struggles of First Republic Bank and Deutsche Bank. You know, you've got First Republic really struggling and potentially in big trouble because they're having to replace lower cost deposits that leave the bank with higher cost deposits, which will hurt the bank's margins and be a huge drag on earnings. The latest study actually finds that 186 banks are at risk of this contagion. So what are we at, like 181 now left? The Fed continued with another quarter rate hike this week. The SEC sent a Wells notice to Coinbase with the intent to sue, and they've also charged several public figures like Tron founder Justin Sun, celebrities like Lindsay Lohan, Jake Paul with crypto violations. Now, if you've watched my previous video on this, you'll know that the fees are likely just gonna be slaps on the wrist. Moving on, Do Kwon is finally arrested in Montenegro, and the long-awaited and highly anticipated ARB token finally airdropped yesterday. According to Miles, people made anywhere from $600 to over $50,000 and up. The Arbitrum token spot traded at a local high of around $1.57 yesterday, which, hey, it's free money. If you'd watched my previous video on how to qualify for the Arbitrum airdrop, subscribe if you don't want to miss another. And Balaji bets that one Bitcoin will be worth $1 million in 90 days. Okay, let's talk about that. The others are pretty straightforward, so I want to talk about this $1 million Bitcoin and what that would realistically look like. Balaji is the former CTO of Coinbase, and recently he's been on a podcast interview spree talking about his public bet on Twitter. I watched his segment on Bankless, and I gotta say, he is very good at doom and gloom. You really just get like the chills listening to the fire alarm for his apocalyptic prediction. And while he's been right on a couple things from his 2020 pandemic prediction months before it hit the US, I would say that his latest hyperinflation prediction is likely and hopefully overblown. Not saying it's completely off, just saying it's overly dramatic. And this is why. But obviously this is a lopsided bet because the other side of the bet, at the very least, wins 1 million if Bitcoin doesn't reach $1 million in 90 days, which will still be worth a lot because there's no hyperinflation in that case. And if it does reach $1 million, then the other side pays Balaji a hyper devalued dollar amount. So you can really only win by taking Balaji's bet. It actually started with James Medlock saying, "I'll bet anyone $1 million that the US does not enter hyperinflation." Being a very lopsided bet, it's surprising that somebody took it. And that somebody is Balaji. He said, "I will take that bet. You buy one Bitcoin, I will send 1 million USD. This is a 40-to-1 odds as one Bitcoin is worth around 26,000. The term is 90 days. All we need is a mutually agreed custodian who will still be there to settle this in the event of digital dollar devaluation. If someone knows how to do this with a smart contract, we can do it on chain. So I can send USDC. If you won't do that, name a custodian." And in the comments, somebody already wrote the smart contract for it. So in this thread, he kind of goes into more of why he's doing it. He starts off with saying, "Just as in 2008, bankers lied. This time, the central bankers, the banks, and the bank regulators have lied to all dollar holders and depositors." And in this tweet, he includes the chart from the FDIC showing the unrealized gains / losses on investment securities since 2008. And as you can see, this chart is ghastly. One of the things that he pointed out, which was really interesting, is he said that hyperinflation, one, happens more often than you would think, and two, it happens much faster than you would expect. And the chart that he uses to support his claim, another point that Balaji brought up in his bet for a 90-day hyper devaluation of the dollar, he pointed out that the feds and the government themselves are the ones who bankrupted the banks by essentially hiking the interest rates and devaluing the T-bonds, which is what a lot of these banks were guided to stack up on. So for example, many of Silicon Valley's banks' assets were long-term government bonds. And despite being a sound long-term investment, they weren't worth as much as when they were initially bought by SVB. Perhaps they invested too heavily in these longer-term mortgage securities with more than 10 years to maturity. But at the same time, the Fed was also the ones that devalued their holdings aggressively. And if you look at the federal funds target rate, it has been the highest since around 2006. So why does the Fed raising interest rates hurt T-bonds or treasury bonds? According to ChatGPT, when the Federal Reserve raises interest rates, it increases the cost of borrowing money for banks and other financial institutions. This in turn leads to an increase in the interest rates on various loans and investments, including treasury bonds. Treasury bonds are fixed income securities that pay a set interest rate to investors, and so when interest rates rise, new bonds issued by the government will offer higher interest rates to investors to compete with other investments. As a result, the value of existing bonds with lower interest rates decreases because they become less attractive to potential buyers. Also, higher interest rates can lead to a stronger dollar, which can make the US exports more expensive and less competitive in international markets. This can potentially slow down economic growth, which can further impact the demand for treasury bonds. So it is a vicious loop that just downward spirals. This isn't your average shitcoin. This is actually the US dollar's purchasing price in comparison to the purchasing price of Bitcoin since it was created. Now, when asked about why he's suddenly giving timeframes and specific price calls, he explained on Bankless that it's more a bet of the dollar's devaluation, hyper devaluation. He isn't really trying to predict time frames or specific price action calls. He's more trying to draw attention to the fiat crisis, the bank insolvencies, the ballooning national debt, and money printing. So let's think about the situation, right? With Bitcoin currently around $28,000, it would have to roughly 35x in 90 days to reach $1 million per Bitcoin. Think of the implications. Forget Bitcoin for a second. That would also mean that all prices are pretty much up 35x as well. So if eggs cost, let's say $10 today, that means they would cost $350 in 90 days. And not only eggs, but gas. Like gas right now is about $4, which means it would be $140 per gallon in 90 days. Everyday commodity prices would be so insanely inflated that the results would just be catastrophic. And Balaji points out this too in his interview with Bankless. If we do get to that point, the government would probably try and step in and enact price controls, which in that case would just mean shortages across the board. So sure, eggs would still technically cost $10 by government mandate, but there'd be no eggs, right? People would be doing runs on stores and looting, and there would just be mass destruction. And look, we got a little taste of that during the June-July 2020 pandemic crisis, with the riots and lootings in LA, literally just down the street from me. And that was just for a temporary curfew and a public mask mandate. Nothing near a hyper devaluation of your money, your spending power, basically becoming immediately poor in 90 days. So obviously Bitcoin to $1 million by then would be exponentially worse. Even if you're like, dude, but I have a lot of Bitcoin and it's gonna rise 35x in 90 days, and you feel super rich, but like, where's the infrastructure to use any of it? Bitcoin is nowhere close to being integrated enough in our society that it can be useful as currency. I think this article puts it best. Bitcoin needs to service billions of Bitcoiners and millions of businesses. And where will those who had no Bitcoin before hyperinflation get their Bitcoin? Will the centralized exchanges even survive the sudden onset of hyperinflation? Maybe they will, maybe not. Maybe people will broadly begin accepting Bitcoin for payment for goods and services. Maybe some will sell their possessions and assets for Bitcoin. Who knows? Bitcoin is an amazing technology that was born out of the 2008 banking crisis, and it's intended to save us from another one like it, which we're kind of going through right now since this is the second biggest banking crisis since that time period. And I think one day maybe Bitcoin can save us and maybe one day we'll get there, but definitely not in 90 days. So it's definitely a very crazy sort of performative bet in my opinion. But first I do want to acknowledge that he's at least putting his money where his mouth is, right? Not only did he make 2 of these $1 million Bitcoin bets, he is also paying $1,000 in to the top 1,000 tweets that call attention to the valuation of the dollar. Hashtag BitSignal, which means that so far he has put $3 million on the line. So of course I threw my name in the hat with my BitSignal tweet. I said the banks, they have about 620 billion in unrealized losses, linked to source, and SBF rightfully on trial for 8 billion in losses. And if you look at it visually, this is the money lost by SBF, around 8 billion, which by no means is a minor amount, but compared to the money lost by all the banks, who by the way are not going to be on trial or in jail, and actually are getting bailed out by the government, they've lost $620 billion. Meanwhile, the Fed prints 80% of all US dollars in existence in a mere 22 months, linked to source, and the USD value has eroded over 50% since 1990. But also the Fed, everything is fine. Bitcoin's a scam. Go like it, go retweet it, help your girl win $1,000 in Bitcoin, because apparently we're all gonna be really poor in 90 days. So pretty much in my generation alone, our purchasing power has decreased by over 50%. Let that sink in for a little bit. Also, link to source. I'm gonna put the link to this tweet as well as links to all the other important information and resources in the description below. Make sure you hit that like and subscribe on your way scrolling down. That's all I have for you in this video. Now that we are all caught up, let me know what you think of the $1 million Bitcoin bet. Thanks for watching, and I'll see you in the next one.